Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, it's been a lot of topics at the moment. It's pretty much dominating the markets, with the China trade, the potential US government shutdown, to the uncertainty around Britain's divorce from the Brexit with the EU, as well as the market in the stocks in the US, with Wall Street still tumbling after making significant highs overnight. The Australian dollar, though, is still chipping away at this 60-day moving average, which now comes in at 71.90. If we just click on there, you can see it comes in at 71.91. It is assessed, though, from a technical point, the market should break down, eventually wear this level out, and take on the challenge towards the region of 71.35 and expose the region of the 70-cent region. It is assessed, though, that any advantage should find resistance around 72.35, as the market currently trades just above 72 cents. It is seen firmer above at 80.90. Well, it would seem that the dollar index slipped slightly overnight from the 97.5 highs and back down towards the 97 handle. This in turn saw the euro push back up towards 113.70 this morning. It is assessed, though, that the downside expectation still holds towards the region of 111.60 to 65 and reassess from there. Anywhere from that region, I do suggest to take profit, as we could see a rebound from there. Any advances up towards this region that's seen around 114.65 still offers as a potential sell zone. The dollar yen hasn't made any significant moves since rebounding off the level of 112.1520. It is assessed, though, that the market still looks poised for a further test down and maybe see a pullback today to the region of 113.1270.90. But I believe this will be short-lived, because overall, in the broader picture, since the rebound twice off, or third time actually, off this level of 112.1520, could see further challenges towards 13.60 to 114.20, where was the recent rejection. The pound surges overnight, and on the back of that, the Prime Minister Theresa May won the no confidence vote victory. From 200 to 177, she came to victory, and now has a bigger task of trying and getting the Brexit through by the 29th of March 2019. Still, the Prime Minister has to concentrate on her next greatest challenge, where many of the members of both her party and the rest of the Parliament oppose to her Brexit withdrawal agreement, which will make it almost impossible to get through Parliament. Still, if that's the case, then we still expect to see a hard Brexit, and these gains should eventually fall further, and turn around, that is, and fall further back to the lows of 124 to 122. The reason behind that is that we have a descending triangle that broke. As long as we maintain under 127.2050, then I'm bearish, and I do expect to see the target of 122 to 124 reached. Safe haven demand is still in favour of the month at the moment, with the upside potential holding towards 12.50 to 60 area. Although 50 is holding a bit of a short-term cap, I do expect to see that eventually go, but we could see profit taking towards the 55.60 area. The base, though, is a little bit lower, and I don't recommend buying into around 36, so keep that in mind. And wrapping up with oil, the market actually slipped overnight and back towards the base around 49.80 to 50.80. It is assessed from there we should see a rebound. I'm not bearish at these levels, and you can see here that the indicator is clearly getting prepared for a bullish breakout. So I am expecting to see a move up towards 54 to maybe $55 a barrel. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.